It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. This is Paul Peebles, national underwriter for Old Capital. And joining me today is the mayor of Beckerville, Mr. Michael Becker.
Hey, Paul.
Michael, who owns over 5,600 apartment units, 27 different large multifamily properties, $100 million in investors' money. He went from being a loaner of money at a large national bank to an owner of multifamily real estate in the Dallas-Fort Worth area. Mr. Michael Becker, who owns lots of apartments, is a great source of great knowledge about multifamily, and we are proud to have him on the Ask Mike Mondays. So, Michael, how are you?
Doing well.
So tell us a little bit. You just had another success in the multifamily business, and I think it would probably be good to kind of share that success and talk a little bit about that. Let's talk a little bit about the Encore.
Yeah. So we just sold a property as we record this last week, and it was a great success. We owned a deal in a good suburban market of Dallas-Fort Worth. We purchased it in 2014, and we were able to come in and through our 10-year ownership of about 4 years, we were able to come in, take it from pretty much the worst property in the entire city of Grapevine where it was located to basically one of the nicest Class C assets in the entire city of Grapevine. So kind of worst to first is essentially what we were able to do. Yep. Taking it from a place that, the city of Grapevine's a pretty high-end suburb. It had one little area where it had a lot of workforce housing, and we were in that little stretch and took it over. We had some crime issues on the property when we first took it over. We were able to clean all that up, as well as just had a bunch of deferred maintenance on the exterior. All the wood was, it was kind of the paint was peeling off the wood, so we had some wood rot and was a nasty, ugly yellow color, and we were able to come in and spruce it up, paint it, use some carpentry work. One of the first jobs where I went in through and did the horizontal cedar patio enclosures. So really kind of just transformed the look of the property. And then we went in the units and it was really nasty what the previous group was doing. They were, when they're turning units, they were even using things like used carpet for God forbid, which is so gross, and had, a few down units. So we're able to come in and, completely transform the property. And through that process, we more than doubled the NOI and more than doubled the value of the property on our 4-year tenure. And we're able to successfully sell it. We ended up selling the deal off market to a gentleman that we sold. That was the 5th property that we did together.
I think that's really where I want to kind of talk a little bit about that transaction, just a little bit more about. You sold your 5th property sold this property. So how would you explain it?
So we decided, kind of going through, we weren't really planning on selling. So that property, we'd bought the deal with a 10-year Fannie Mae loan in 2014. About 2 years into the process, we were able to put a supplemental loan on and delivered, all the money back to the investors. So this deal, I think 20% over the initial capital invested had already been distributed back. So all the money plus 20% back. So we had, negative money left in the deal, and it was cash flowing on a monthly basis. And, it was a great property, great location. So we weren't necessarily looking to sell it, but we got approached by a broker that had a different buyer that was looking to potentially buy it. And so we said, okay, well, we can't just take one offer. We need to kind of run like a little mini process. So we had the broker go out and he brought in, 3, 4, 5 guys. And of course, this one particular buyer that we sold a few deals to, we were like, well, we got to make sure he takes a look at it because we've already kind of been there, done that, and had a very successful history with him. So we brought him in, and ultimately, we kind of got to the point where it's like, well, if he could pay this number, we'll choose him over the next group that was right there with him. And he ended up basically just matching where this other group was, and we chose to go with the horse we rode in on, the buyer that we knew. We had a contract. So kind of what are the reasons? I think the question you're probably going to ask me is, what are the reasons why would I choose to go with him over somebody else? It was just simply that we had already executed contract with him 4 times before. He's already done what he said he was going to do 4 times, and we knew it was going to be one of the easiest, smoothest transactions. He also happened to be a client of Old Capital, so we felt like we had some confidence in his ability to get not only the equity from his track record, but the debt terms that he needed to go ahead and execute on the deal. So there was a lot of synergies going with them, and we decided to go off market versus widely marketing it, just because we had this comfort level with him, and we knew he was going to pay a fair price to us and execute on time. So that's exactly what we did with that deal, and it closed just as planned, right on time, and no issues along the way. I think it was the cheapest legal bill I've ever seen in my life for one of these transactions, because our lawyer didn't have to hardly work on the deal at all. And for us, we were able to deliver unbelievable return in a 4-year period. It was like a 4.5 multiple for us on our deal. And we're going to essentially take that money, do 1031, and buy, much nicer, newer products with that same money in a different market. But with that said, I'm still a little sad to see it go. It was such a good asset, such a good location, that I know that the buyer is going to do well with the property long term in that submarket.
So you buy these properties in partnerships through syndications, and so you have people invest into these transactions. Again, past performance is no indication of future returns. So what are some of the questions that the passive investors need to know? What are the things that they're asking you? What should people know if they're thinking about investing into a syndication?
There's a lot of common questions. The first thing when you raising money, I always try to think about this from the limited partner side, from the passive investor side, because they have, a world of opportunities as an alternative to your investment. So you got to kind of think about, if they're not giving money to you, where else would they keep their money? So, got to think about that as like the alternative. So to get people to actually take their money out of their checking account or take the money out of the stock market and give it to you, you need to overcome a few hurdles. So first and foremost, is people need to be trusting of you and your track record and your experience, and why are you going to be the appropriate steward of their money to take it and put it in the asset with you, because you as a sponsor is going to make the deal go or not go. So they need to have a comfort level in you. So you need to kind of start there. Why you? What's your background? If you're starting out and you're new with the business, it's like we mentioned many times before, it's like a team sport. So having other team members on your team, like your property management company, your mortgage broker, your lawyer, those are things that kind of help overcome, or potentially having a co-sponsor on a deal, someone that's already been there, done that, have a successful track record, so you can kind of reference your collective experience versus your limited experience or no experience of your first timer in the apartment syndication business. The next thing really is people want to understand, everyone buys a story, so that you need to kind of explain the deal story. One of the most effective tools that I always use is just a simple map, an aerial, kind of showing the location of the subject property and then kind of all the things in and around it. Because at the end of the day, this is a pretty simple, straightforward business. It's about location, proximity to good quality schools, proximity to jobs. Jobs are real important because people tend to live close to where their employment is. If you're a renter, if you own a house, you drive 30 minutes, 45 minutes to own a home into your job. But if you're a renter, you tend to try to live within 10 or 15 minute drive of your employment. Also retail, highway systems, major thoroughfares. Those are all the things that people want to look for. So showing an aerial, showing the proximity of your property, those things, I found that to be one of the most effective things I can do to sell the story of the deal. And then finally, really what these people want to know is, when and how much money am I going to get back along the way? So you need to be able to articulate your plan is to buy the deal. You're going to renovate a certain number of the units, and you're going to look to either refinance it along the way, or you're going to look to sell it at a certain time period. So you need to be able to articulate to your investors, if I give you $50,000, $100,000 of my money, how much and what's the timing of that money returning back to me? And you need to be able to clearly articulate what the projection, the pro forma is on the deal. If you could kind of master those three things, and then also I guess the fourth thing to kind of throw in, if you're buying these deals, most of these deals that we kind of tend to be involved with at Old Capital have a value add component to it. Virtually every deal is going to come in and do some level of renovations and increase the operation. So you need to be able to articulate, hey, the in-place numbers are X, but I'm going to make them Y and increase the rents. And I'm able to do that because the neighboring property, these three comps down the street or within a 1 mile radius, are getting higher rental rates. We're getting $700 on average at this property, and the property down the street is getting $800, but they have black appliances and new flooring and light fixtures and plumbing fixtures. So if I spend $4,000 a unit or $5,000 a unit, whatever your capital budget is, I can make this old unit look like this one down the street. I should be able to raise my rents at $100. So you need to be able to articulate the story and how you're going to produce the returns and the timing of the money I just referenced. So those are the four main things, I guess, when you're raising capital that people want to know.
So tell me a little bit about getting the message out to the people that are going to invest. I guess there's many different ways, whether it's teleconference calls, in person, or webinars. What is the best way that you have found getting your message out?
Yeah, so the most efficient way, which is certainly not the way we started, but the most efficient way is I found that a lot of people that do this do the same thing. We schedule a webinar. So we'll have a webinar on a Wednesday night at 7 o'clock Central, for example, and we'll invite, our database to go attend a webinar. And then those that can't attend, we record the webinar, and then they can watch it on demand whenever they have time to watch it. So that's the most efficient way to present an opportunity to people. Other ways are either in person or one-off teleconference calls. So if you're going to do a larger syndication where you need, a lot of unrelated people to put the money together, that's certainly it. If you're just looking to maybe joint venture with one other individual, maybe more of an in-person meeting or one-on-one kind of conference call might be a little bit more called for.
How many times will you practice before you get on the webinar?
We've done this so many times now, but at this point, we'll certainly map out. So we have a good, when we're doing a webinar, we try to get pretty well organized. We prepare, we have an outline, and then we'll run through it 2 or 3 times before we actually go live with it, making sure that all the points have the order that I want to kind of present the information, and I make sure that all the critical salient facts I want to make sure everyone notices in the PPM or the business plan, I point that out on the webinar.
Can you think of in your last webinar you did that there was 1 or 2 questions that came back, and what were those kind of questions that the people didn't get the initial overview?
One of the things that, like I said, I kind of hit all the top things that I think you need to make sure that you can articulate to a potential investor. One of the things I think on that webinar, to be kind of self-critical myself, I didn't do as good a job as far as the specific timing of when we think, the money's going to come back in a simple way. So like any good business person, we always try to, self-analyze everything we do. So that's one of the things. The next time I raise capital, we made a really simple chart, kind of like, hey, here's our minimum investment. You invest this. Here's kind of your annual timing. And here's kind of on a, if we hit projections, this is what you should expect on an annual basis. And here's your, cash on cash return. And here's your IRR, and kind of show in a very simple form. Simple is better. So we want to make sure that we kind of drove that point home. And we waited to like the end of the webinar, Paul, to really kind of hit on the timing of that. So now I think when going forward, we're going to do a quick little snapshot on the front end. Hey, here's a high level of returns. Here's the timing of the returns. Now let me go into the business plan and explain why. And then we'll talk a little bit more in depth, kind of, that. But we want to hit it on the front end so people don't have to wait 35, 45 minutes into a webinar to kind of understand what the return of their investment is going to be.
Some great information, Michael. I appreciate that. Now, if somebody wanted to get more information about SPI and what you guys do on acquiring and operating and disposing of multifamily properties, tell them a little bit about where
I
they
think
can
there's
get a hold of you.
two ways you can do that right now. We always talk about the one, but the other one, the one of the best ways to kind of get to know a little bit more about me is I'm going to be, if you happen to live in Northern California, I'm going to be out in Northern California on August 16th. So in a couple weeks or less than 2 weeks when this thing originally airs, our buddy JC Castillo and Paul kind of host a meetup up there. So it's going to be at the DoubleTree by the airport on August 16th that evening. So if you guys want to kind of meet me in person, that'd be a great place. If you happen to be anywhere near the San Francisco, San Jose area, that'd be a great place to meet me. But more than that, if that doesn't tend to work out, the easiest way to find more information about us is just simply go to our company's website, which is www.spiadvisory.com. That's SPI like spy advisory.com. And there's a contact us form. Fill that out. And I'm always happy to have a 10 or 15 minute telephone call with listeners from the podcast.
Some great information. That was Michael Becker, the mayor of Beckerville. I'm Paul Peebles. Have a great day.